Wanted to talk about USO stock and XLE stock. Both of these are oil-based ETFs. USO stock, of course, follows petroleum. XLE would follow the energy sector. Now, the big plot du jour is interest rates. There is an effect on oil and profits for energy companies with higher interest rates. I've got a couple charts I want to show you so you can see the inverse relationship that when interest rate yields move higher, these ETFs drop a little bit. It's an interesting chart. As we see these interest rates move even further higher, it's possible USO and XLE stock both break significantly to the downside. Let's jump in and I'll show you what I'm looking at. Here where you're looking at oil versus USO ETF. USO ETF, of course, follows oil. They try their best to mimic the price movements of oil. But before we get started, I do want to point out a couple things. This is a new channel for me. It's a breakaway channel. Make sure to follow the links down below to my website. Pick up the free email newsletter where I send out a daily email letting you know what my content is for the day. There are other channels, of course. And thank you so much for hitting that like and follow button as I continue to grow this new channel. So USO versus oil, they're kind of the same thing. A lot of us don't have. I have a commodities account. I've had one since the early 1990s. And that's actually how I got started, was with commodities, FX specifically. So I can trade oil futures if I want, but sometimes ETFs are so much better. Many people do not have access to commodity trading. So these USO ETF is a great way to sort of take advantage of price movements with energy. My thinking is that we're probably going to see some energy prices moving lower because of higher interest rates. Ultimately, higher interest rates are going to mean that the world economies will contract somewhat. Borrowing costs are going to be prohibitive for both businesses and especially consumers, which really drive the economy. This will contract expenditures for both consumers and businesses, which will mean less demand on oil. So there are constant ripple effects throughout the entire economy with these higher interest rates. And interest rates look like they are not only going to remain higher for longer, but probably kind of trickle further higher. The next one I wanted to look at was the price of oil versus XLE ETF. XLE ETF is the energy sector. So you get some of your biggest players in the world tucked in there. If you wanted to trade the energy sector, XLE ETF is an excellent way to do that. Instead of just cherry picking one particular stock, you can get the entire sector. And as we can see, oil has been trickling up a little bit higher, and XLE ETF, XLE stock, I should say, is following it as well. So USO and XLE stock kind of move about the same, although if you look on the percentage basis, USO stock is on par with oil itself. Therefore, XLE is much higher, and that makes sense because oil companies are taking the base commodity, converting it, and making a profit off of us. And then finally, here is the 10-year Treasury yield versus oil. Actually, USO stock, which would be oil. As you can see, and if you look at like right around mid-August, the 10-year Treasury yield moved higher, and this suppressed the price of oil somewhat. Now, the correlation is not exactly one for one, but with higher interest rates, this would greatly affect a capital-intensive industry such as energy. And as we can see, the price of oil the interest rates have been moving higher and higher, and we've been seeing USO stock kind of moving lower. I'm expecting that given this, we might actually see a break lower in USO stock. And that's really what I wanted to kind of point out. These interest rates are really going to, across the board, crimp everything. They will crimp consumption by consumers as well as businesses. Business expenditures are probably going to wane off a little bit because the cost of borrowing is more prohibitive than what they were just last month. Because of that, there will become a buildup in supply of oil. As oil builds up, USO stock will fall, and XLE stock, because these companies are going to be sitting on surplus, are going to have to start slashing prices, seeing a cut to revenue and profits. That will push XLE stock lower. I am kind of looking at XLE stock, and I started covering these a couple weeks ago, but this channel just launched, 2 weeks ago, and I talked about this previously in a video there. XLE, the sector, I believe, is probably going to start stagnating and then moving lower because of these higher interest rates. They go hand in hand in some capacity. These energy companies are very cash intensive when it comes to getting their products to market. With higher interest rates, you're going to see higher costs, which means lower profits. So there is this entire economy it is an organic organism, and it's not just, you can't just look at one stock and think you can just pick that one stock and understand everything that's going on with that one stock. All those companies operate within an economy. They are not independent. They are not on an island. So with these higher interest rates, this is going to affect everything across the board. Now, we're crossing some pretty high numbers here with the 10-year Treasury yield, as well as many of the other long-dated Treasury yields. How much higher? I'm kind of at the point where I think we're probably going to see some amount of leveling out at this point until we get some data points where they give us an indication of what the Fed needs to do next. We continue to see robust numbers, which are strong with regard to how strong the economy is, how strong the employment index is, and because of that, it doesn't give the market enough confidence that the Federal Reserve will be lowering interest rates anytime soon. Interest rates will remain higher for longer. But at the same time, we haven't really gotten that last nail in the coffin where it's like, wow, the Fed really needs to start ratcheting up interest rates again at warp speed. We're not there either. So we're kind of, at this point, really data dependent, but that next data point could really launch interest rates up or down very rapidly. Now, because of the strength of the economy, my expectation is that interest rates will eventually go higher, but we may be pausing sort of at this level for a period of time. This could get some individuals to start nibbling at the bottom, like TLT stock and stocks such as that, to take advantage of a move that has moved quite a lot. Profit taking, buying on the dips, things like that are probably going to ensue. So this is something that's going to be ongoing. I'm going to continue to put out content like this, keep everybody up to date. Make sure you hit that like and follow button down below. Thanks so much for growing the channel with me. As well, make sure you follow those links down below. Get that free email newsletter where I send out every day with the content I've produced for the day. See you in the next video.